Hey guys! Hope you are having a nice weekend. This is a short video on our portfolio. As you remember, we started the portfolio on the 6th of August with £30,000 initial capital. We will add £500 to the portfolio on the 6th of each month. The aim is to grow the portfolio about 10% each year. As we said earlier, we cannot expect these gains every year, as some years, we may have drawdowns. But over the 10 years that we will be doing this, the gains should average out. We are relying on the effects of compounding over time to grow the portfolio to more than £173,000 in 10 years. Here is how we performed in the first week. This is a screenshot of the portfolio. We have opened a demo spreadbet account on IG and the account number is Z50Y95. The portfolio has gained £2,069 and currently stands at £32,069. We have open positions which are standing at a profit of £316. We have not added any funds into the account as you can see here. And if all positions are closed at current levels, then we will have a profit of around £2,370, which is nearly a 8% gain. Now we did have the advantage of volatility on our side this week and we were able to do many short-term trades on the Nasdaq which has boosted our portfolio gains a bit. Muffet is very good in short-term trading on Nasdaq when volatility is very high. Next week might be different and we might make mistakes resulting in drawdowns. These are our current positions in our portfolio. We have had to learn how to use the spreadbet account as these are leveraged accounts and we have to be cautious in our position size. As you can see, most of our positions are taken based on our convictions on the stocks and have been discussed in our previous videos and stock analysis. Today we will go through them quickly to look at the reasons for taking those positions in our portfolio. First off, we took positions on the biotech ETFs IBB and XBI. We are very bullish on the biotech sector due to our belief that the next multi-billion-dollar gains will be in the biotech sector due to the advances in molecular biology and genetics and the convergence of AI with biotechnology. We have multiple companies working our therapies for various unmet medical needs in oncology, metabolic diseases, and rare diseases. One example is the GLP-1 receptor drugs by Eli Lilly and Novo Nordisk. This has resulted in their share prices gaining many billion pounds. So instead of looking at each of the companies to see which one will outperform, we have taken the easy option of investing in an ETF which will cover all the companies and be able to participate in the success of each of the companies. IBB is more top-heavy with majority of their holdings in big biotech companies like Amgen and Gilead Sciences. The XBI is more evenly distributed with more focus on small caps. We have taken both the positions in one allocation block. The next one is the REIT sector. We are very bullish on the senior living REITs. These will benefit from the aging population in the West, especially the US. The boomers control the majority of the wealth in the US with some estimates that they hold about 50% of the wealth. By 2030 most of the boomers will be above 65 years old and they will be looking to downsize and some of them will need housing in a secure environment with nursing care available. This is where Omega Healthcare investors come in. They have senior living accommodations and skilled nursing facilities with margins of up to 20%. Their market cap is $10 billion and their dividend yield is 7%. Lately they have outperformed the broader S&P 500 index by quite a bit. They will also benefit from the fall in the interest rates as they are highly leveraged and will benefit from falling rates. One of the other favorite dividend REITs on YouTube is Vici Properties. This REIT is focused on gaming and entertainment properties and are the biggest landlords in the Las Vegas Strip. Their market cap is $31 billion and their dividend yield is 5.3%. Again they are outperforming the broader index lately and are likely to benefit from falling interest rates. The only Mag 7 stock we like is Amazon. We think that it is the most aggressive stock among the Mag 7 and is likely to outperform the others in the next 2 years. Our ideal entry point would be around $140 but we didn't want to miss out if the price never comes to that level. So we have taken a small position and add to it if Amazon were to fall. We will do a full in-depth analysis on Amazon stock in a separate YouTube video. Then we took a position on Visa. This is one of the few financial stocks that we are happy to hold. In 2008, Muffet famously took positions in the Royal Bank of Scotland without knowing that it was going to go bust. Muffet learned from that lesson and vowed never to buy banks. Although banks are tempting, we think that it is too risky. We are at the same level of interest rates as the previous financial crisis in 2008 and only this time the bubble is bigger. Also we note that Warren Buffett is selling his Bank of America stock and getting more defensive. Visa has a market cap of $505 billion and has been in a long-term uptrend. Every time the price tests the 20-month EMA, the price has been supported apart from big sell-off during COVID and in 2022. So we have taken a position in this. We have also taken a position in AMD. This is more of a technical trade. AMD has a market cap of $217 billion and the PE ratio is very high at 157. However, price is at a support zone and so we have taken a punt on this. To be honest, this is best played with options strategies, but this account will not let us deal in options. We are not very confident on this, and so if the price were to fall, then we will close the trade. Also on Friday, towards the close of trading, we took a position on Barrick Gold. Barrick Gold was one of our favorite stocks, but we have been disappointed as the price has not budged even though gold is up nearly 15%. We think one of the concerns on Barrick Gold is the Mali gold mine, which is facing an unfavorable political climate. This is why we think that they are not performing well. They will report on Monday, August 12th. We will make a decision after the report to decide if we continue to hold the position or not. Barrick Gold has low leverage at around $500 million, which is why we favored Barrick over Newmont Mining. But we can never be right all the time, and when mistakes are made, we accept that and move on. This is the chart comparing the performance of gold, Barrick Gold, and Newmont Mining. As we can see, Newmont Mining has started to track gold while Barrick Gold hasn't. So fingers crossed for tomorrow. We have also taken a position on Bristol Myers Squibb. This is again in the healthcare sector and has fallen quite considerably over the past year. They have fallen from nearly $80 to almost $40 before bouncing to around $46. Their market cap is $94 billion and they have a dividend yield of nearly 5%. Also, one of our concerns about this stock is the high debt levels, but these are falling and so we are overall positive on this stock. This stock is a defensive stock and so we are happy to hold onto it for now. Finally, we have Barratt's Development. This is a UK home builder. They have a market cap of £5.1 billion and pay a dividend yield of 5.33%. They recently made a bid to acquire Redrow Homes, which is a premium home builder. There has been some issues with the Competition Authority, but we hope that these issues will be resolved. They have traded as high as 800 pence before and are currently trading at 523 pence. We are bullish on the stock because there is a big shortage of homes in the UK and the UK government's main priority is to make it easier to build housing by relaxing planning permission. So over the next 1 to 2 years we think that they will start to perform well. Also, the rates are being cut, which will increase housing affordability. Now a brief overview of the markets. We will do our analysis on S&P 500, which is a broader index than the Nasdaq 100. The monthly chart is showing an uptrend with prices well above the 20-week EMA. When we look at the weekly chart, price has bounced off a previous accumulation zone. The price went below the 20-week EMA but closed above it. Since we have not breached the last higher low, from a technical standpoint we are still in uptrend. So the price is bullish. But it will become bearish if price trades through the last higher low at around 49.35. There are some cautions here. We are approaching the important presidential cycle and so we will have a very volatile stock market leading up to the elections. Then there is always a risk of escalation of geopolitical tensions in the Middle East, which can affect oil prices. We have to have these at the back of the mind when we take positions. This week the most important data point will be the release of the CPI. This will have a profound effect on the markets and gold. We think that the CPI is likely to fall. This will likely result in fall in the 10-year yields. We are expecting 10-year yields to fall below 3.25% before the end of the year. We hope you liked this video. Please subscribe if you think that it was useful.